Welcome to Flip Nerd Live, discussions with and training from America's very best real estate investing professionals. We meet live twice a month to discuss what's working now and get your questions answered. We broadcast live inside of a private online community, which you can join for free by visiting flipnerd.com/live. Let's start today's show. Hey everybody, welcome to the show today. Really excited to have you joining us here live. And really excited to have my buddy Rob Swanson on with us. Rob, how are you, my friend?
I'm doing fantastic. What's up, Mike?
Just happy to be here with you. The best thing about the podcast, doing this for like 8.5 years now, different varieties and different flavors of the podcast, is I get to hang out with people that I really respect and good friends and smart people, and you get to share your knowledge with whoever's joining us today. So glad you're here.
Glad to be here. Be awesome.
Yeah. So, hey, we're going to talk about some really cool things today. For those of you that don't know Rob, I'm going to ask him to tell us a little bit about his background in just a moment. But he's really a legend in the industry, and he's just a smart guy. He's the type of guy that when he shares knowledge, people listen, including me and lots of other people that many of you might even look up to. That we all look up to Rob because he's got some amazing life experiences and really a lot of wisdom in terms of his real estate investing career. So today we're going to talk about a lot of things. Really, just this is all ultimately about freedom, right? It's like building up a business that allows us to live a better life for our families, to help support our teams and our communities and things like that. And we're going to be talking a lot about, what's working now, what's going on in the industry. We're going to talk a lot about passive income and some ability to generate recurring revenue for a lot of you that are going into a new market cycle. You might not really have other streams of revenue that can feed you. You might have, if you're just a wholesaler, like you might be a little more nervous right now than you are if you're a wholesaler and you also have 100 rental properties because you have another stream of income that's actually pretty stable right now. So those are the types of things we're going to talk about today. This is meant to be interactive. So if you would, if you type some questions in, if you ask a good one, we'll try to bring it up here. So, and if you ask a bad one, maybe we'll skip it. So ask good questions, basically. But Rob, why don't you tell us a little bit about your kind of background and, kind of how you got up to where you are today?
Yeah, happy to, Mike. I'll give you the abbreviated 22-year history. I got into it like most people that, got into this business. I attended a late night seminar at the Denver West Marriott back Tuesday or Wednesday night, back in the early 2000s, now late 90s, or somewhere in the late 90s. And, the guy on stage had a lot of smart things to say, and I wasn't buying. I was just there to get information. But I'm like, man, the more he talked, the more I felt like I could do that. And so I was a buyer. I was a product buyer. I went through coaching. I spent, $22,000 in the year 2000 to enroll in a coaching program.
That's like $100,000 in today's money, right?
Yeah, it was a lot lot of money.
Can you say who that was?
Yeah, it was through Russ Whitney and their organization back in the day.
Okay.
And here's what I say. Thank God for really good salesmen, because I wasn't in there to buy, but I didn't realize they were selling at the time. But because they did it in a way that they were pros, I felt like, number one, I could do it. Number two, it made sense to me. Number three, I wanted it, and I bought. Yeah. And then here's the difference: I bought, and then I took massive action, right? Yeah. And so I got into the business. I built up a rental portfolio of 40 some houses in the first 18 months of my real estate investing career. And I did that with everything from traditional financing to owner financing to sandwich lease options to other creative tools to cash transactions. I had, trial by fire, and it was very quick, and I learned a lot really fast. I made some mistakes. I had some wins. And, that brought me kind of up through into the crash of 2008. In 2008, as the financial markets were collapsing, I put my first large real estate fund together. I had done millions in private money prior to that, but then I put a large fund together to take advantage of the crash. And I started to aggressively buy. As the market was going down, I was buying aggressively. And the thing that I learned about that was, as long as I had my rules of what was my buy box and did I understand why I was buying and where did I believe the bottom was, and there was a there was a formula, an approach that I used to estimate the bottom, and I approached it as a value investor, which is what we as real estate investors mostly do. I felt really safe and really low risk, and so that worked out really, really good. We ran that fund for about 4 years. And then, I also call that, Mike, my $30 million mistake. And today, looking at it, it's probably a $55 million mistake. I should have bought and held every house that we bought.
Yeah.
We bought and flipped. We didn't buy and hold. And a big lesson for folks here is you build wealth in real estate by buying and holding real estate. You make a lot of money by buying and flipping real estate, but you don't build wealth.
Right.
And so, looking back, fast forward, I got into the software business, and I built software for my own business. I built software then that I sold to others. And then I acquired FreedomSoft in 2015 and rolled that into my software business and built it into what it is today. So today, I continue to buy real estate. I buy mostly and hold. I'm only going to make major mistakes once in my life. And so I buy and hold. I love passive income. And I like where we sit in the market today, despite some of the tremors and the conversations out there.
Yeah, there's opportunity. We were talking about this. We had a town hall for one of our companies today. Had like 40 people on the call, and we were, some of them are, it's for a service company, so some of them, they're not all real estate investors, or most of them aren't, right? They deal with it, but we were saying, like, who's hearing about a bunch of rumblings in the traditional media that the market's collapsing and all this stuff. A bunch of people raise their hand. We're like, okay, well, let us tell you like how we're different than the retail market on the investor side, and how a down market is actually good for real estate investors, right? And so, guys like you and me have been, I don't wish ill will on anybody, but we've been secretly waiting for a down market for a while, because we know it's like Black Friday, right? That's when things go on sale.
That's right. And, everybody has a choice, right? If anybody that's watching this right now, right, Mike, you took the time, energy, and effort to put this together, reach out to me, have back and forth, like figure out, hey, what time works, and put it all together. And you do it because it helps us. Like when we teach, it makes us think. When we talk about what's going on in the market, especially on a live show like this, we have to think about what are we going to say, and let's try not to look stupid, right? Let's say something intelligent. And for everybody listening right now and seeing this, whether live or recorded later, here's one of the key things. You have a choice right now to say, okay, there is a shift in the market, because that's what real estate markets do. The most consistent thing in real estate investing is change, right? So here we're facing a new change in the market. And so you have a choice to either be on the winning, receiving side of that change, or you have a choice to be on the losing, giving side of that change. And I know I'm going to choose to be on the winning side. And to do that, I got to have a little knowledge. I got to know how to go about it and what to do.
Yeah, well, I know you're going to share a lot of good stuff today. It's interesting to me when I think back about I think for both of us, we started as real estate investors. And as you go on, you bolt on a rental business, then you start doing some coaching. You and I both have service businesses now. I have the mastermind, all those things, right?
Yep.
But when I look back to your comment on, I wish I had kept more, because I feel the same way. I flipped hundreds of houses that I didn't keep. I wish I had kept them now. And we have rentals that we bought for like 20 grand and now they're appraised at like 180. It's like, oh my God, like,
Right.
just imagine if we had all those, but that's kind of how hindsight works, right? You look back and you say, well, what will I do differently next time? I think that's some of the benefit that people that are watching today can get, is like, if they haven't been through that cycle, like learn from guys like us that have been through a cycle before, because you can kind of shorten your learning curve, right? So for me, when I look back now, it's like, okay, I needed active income to pay for marketing and my staff and my overhead, so I couldn't keep them all, right? Or so I thought. I mean, there are ways you can do that now by one company effectively selling it to another, right? And kind of have an acquisitions company and then a rental company. And, the way that we did it is we just took the equity off the table and said, hey, I'm just going to tuck this away and I'm going to just eat the loss I had from marketing or whatever right now. But you don't have to do it that way, right?
That's right.
And then as you move on, just like me, we have service business and other things that provide active income right now. So we're looking for ways to take that money and plow it somewhere else, right?
Yeah.
Which for a lot of us is real estate. And so for folks that are listening right now, maybe let's talk about that dynamic of, you have to have some income right now because you have to pay the bills, you have to cover marketing costs and overhead costs and all those things. But if you really want to keep them all, like, here's a way to orchestrate that. And we'll also let's talk a little bit about the case for scale, right? If you're doing a house a month, not taking anything away from anybody, it's hard to keep it. But if you're doing 4, maybe you could sell 2 and keep 2 type thing, right?
That's right. Yeah. I mean, people ask me all the time, what should I focus on? Should I quit my job? Should I go real estate full time? Should I do X, Y, and Z? And I always break it down into those 2 things that you just alluded to, Mike. And that is, and even my kids that are now grown adults, even my kids, I tell them the same thing. Figure out how to have a high income. Figure out how to have a high paying active income that you can tap into to generate cash, right? Now, at some point in your evolution, you may get to the point where the passive cash flow is enough to generate the cash, and that starts to perpetually build the portfolio. But I always tell people, like, what's your high income earning skill that is going to generate cash based on effort and knowledge that you put in today? And then with that, how do you plow it into real estate and how do you put it into passive cash flow?
Yeah. So by the way, for those that are listening right now, if you could just chat in, we want to make sure you're out there and get some good knowledge here. Just let us know where you're from and if you have any questions or anything you want to share. Also, if you're not live, if you're listening to the recording of this, make sure that you register for our future live shows. I basically do these every 2 weeks, twice a month, and have amazing guests on, and that's just going to continue. And you can register by going to flipner.com/live. That kind of gets you on the list, so we'll notify you when we're going live again. So let's talk about, why is passive income important anyway? I think a lot of folks that get into this, a common scenario would be somebody had a regular job, right? They didn't really like it, maybe didn't even make a lot of money, or maybe they did. And they get into this and they quickly make more money than they ever have before. And it seems like just constantly working hard to make today money. And I think it takes wisdom. It takes maybe some health issues, which I know you've had in the past and stuff, to really understand, like, how can I work today and earn money on that forever, right? Instead of, I have to work today to make money. As soon as I make that money, I'm never going to make another dime off that property. So I have to just be in this hamster wheel of starting over. So talk about, maybe just, I know your story because we're good friends. You don't have to share the whole story, but just this kind of revelation of the importance of passive or recurring revenue.
Yeah, it's huge. And I won't tell the whole story, but I'll just tell people this. I was in 100-mile ultra marathon shape. I was in the best shape of my life about a decade ago. And I woke up one day and I just didn't feel very good. And turns out I ended up with a staph infection internally inside of my inside. And it almost killed me in 2015 and 2016. It was pretty bad. And it took a lot of years to recover and get back to a place where I feel good and healthy and strong again. But I ultimately did. But that made me an absentee business owner for about 3 to 3.5 years. And so if my income would have been reliant on my activity, When I was really sick, my brain was foggy. I didn't function well. I was in pain all the time. I was really sick. So I was kind of out. Fortunately, what I had done is I had recognized this, just, it's the stuff you think about. And at some point I said, I've got to make sure that I get to my freedom number, right? And freedom number is, what's your outgo on a monthly basis and what income do I need to cover it? And that was my goal. I said, I want to get to the point where I'm covered and I'm good. And so those 3.5 years of me literally being an absentee business owner, like not doing anything, my family didn't suffer. My financial situation didn't suffer. I did just fine. I did okay because I had set up passive income. And so, my story, I think, resonates with people when I tell it, because I was in the best shape of my life to 3 months later, I thought I was dying of cancer. I didn't know what it was, and turned out to figure it out. And fortunately, by the grace of God, I had put the things in place ahead of time, and passive income basically saved me.
Yeah, that's great. And I know I'm guessing you probably feel like this too. Like, it wasn't that long ago, I was the young guy in the room. I was like the young whippersnapper, hustling, working hard. And now
Yep.
I'm like the old guy that everybody's like asking questions to or whatever. So I feel like, when I was young, and my parents, I used to walk barefoot in the snow to school both ways or whatever, like we're that guy now. We're that kind of guy now, right? But
Totally.
I just, there's so many things that you share there that I wish I had known early on, right? And
Yeah.
I feel like, the other thing is, and I know like you're not a big debt guy, and so you have a lot of equity too, right? So we have millions of dollars in equity in our rentals. That on some hand, it's like you and I have talked about this. Should I just refi? The debt's so cheap right now. Of course, when it was back like 3.5%, 4%, and I didn't. And I have millions of dollars trapped in equity. I say trapped, but it's also on some level an insurance policy for our families too, right? I mean,
Right.
we're getting up to an age. We won't talk about ages here, but you start to see friends or people that or whatever that have like major health issues, just like you explained there, right? They just seem
Yeah.
more prevalent because we're getting a little bit older, and it's like, God forbid something ever happens to me. I want to live forever, as long as I feel good. But from my family standpoint, we have a legacy there that can be tapped into that doesn't require us spending another dollar on marketing, having an office, like having anything. Like, there's an insurance policy that they could tap into if they ever needed to, right?
Yeah. Well, and the two things go hand in hand, right? So you need passive income because you want to set yourself and your family and your future up to disassociate the work and the time you put in from your income. That's number one. That's the freedom thing everybody talks about. That's passive income. But there's another reason that right now figuring passive income out makes a lot of sense. And that's just where we are in the economic cycle, right? If you look back, and I'm not the sharpest knife in the drawer, but I've spent a lot of time studying guys and gals that I think are a lot smarter than me and piecing my own economic and investment thesis together to say, okay, where do I think we are? If I look back historically in the crash of 73, 74, and the crash of 90, 91, and the crash of 2008, the Great Recession. And, everybody remembers the crash of 2008 for the most part. Some of our audience that we're now talking to, Mike, was, in elementary school when 2008 happened, and now they're in their 20s, early 20s, and they're starting to think about this stuff. Well, if you look historically back, and you can go outside of the housing crashes of the United States and look at the currency cycles of countries like Greece and countries like Venezuela is not exactly as a great example because of their political environment, but Argentina and Japan. The last three crashes were predominantly short-term debt crashes, right? And today, and we're seeing it. We're seeing the next crash is going to be a currency crash. And this is my opinion. And I think I'm right, because there are historically three things that the Fed does to control monetary policy, right? They adjust interest rates, they print money, and they do stimulus directly to the people. Well, they only do stimulus directly to the people historically, that last third tool, when the other two are out of juice. So in 2007, it took 14 months for interest rates to drop to near zero, from 2007 to December-ish of 2008. In 2020, it took 30 days. So that interest rate juice was already gone. When they drop interest rates, they stimulate the economy, right? Well, they had no more juice. They couldn't drop interest rates. Well, they could drop them to negative, but that doesn't work for very long, right? So you get down to zero, they're out of juice. And they've been printing trillions of dollars. Mike, 80% of all of the dollars in existence in the entire world have been printed in the last 24 months. That's insane. 80% were printed in the last 24 months. That means they're out of juice. They're doing everything they can at such an accelerated pace to try to prevent the collapse. And what did we see last year? We saw stimulus directly to the people. And hey, here's your check number one, check number two, check number three, $600 checks. And then, oh yeah, by the way, next year gas is going up 30%. So that $600 really doesn't help.
Yeah, it doesn't help you at all. Yeah.
So, I look at where are we headed next, and I see that the currency is going to be the economic driver of the next crash. So how does passive income play into that? You have passive income when you own assets or you own the control of income streams off of assets.
Yep.
The key is own assets. And an asset is you can own the real estate. An asset is you can own the income stream off of the asset. So if there's two things I would tell people to learn, it's number one, okay, how do we go find these assets to acquire, and what are the strategies to buy them at a discount, and how do I fund them and finance them? But most importantly, how do I structure the ownership of cash flow streams? And when the crash occurs, and this is historically true, this is not theoretical Robism, this is historically true. The people that owned assets and owned income streams tied to assets through a crash, whether it be a short-term debt crash or a currency crash, came out the other side wealthy. Right. So there's going to be, the masses of people are going to be hurt, because the masses of people are not going to pay attention. They're not going to listen. They're not going to try to set themselves up for success. A small segment of the population is going to pay attention, listen, and massive wealth is going to be created.
Yeah. So Rob, let's talk a little bit about like how to analyze investment deals, cash flow deals a little bit differently, because there's going to be tens of thousands of people listening to the show ultimately, whether it's live or pre-record, especially when we syndicate and put things out there. A lot of people know how to analyze a deal for the sake of wholesaling it, for the sake of rehabbing it, or those are some of the easy ways. I think historically, on one level, most of the single family houses I bought them as if I could wholesale them. So we bought them super deep, but we just chose to keep it, which was a good thing. But I think when you're really looking to stack up deals, you don't necessarily have to buy. Of course, everybody wants to buy deep, but you don't have to buy that deep. So maybe share some thoughts and some wisdom on how you might analyze rental properties or owner finance type deals, a couple of maybe creative options, like a little bit differently than you would if you're going to wholesale it or rehab it. Yeah, well, I think a wholesaler needs to, number one, get really good at evaluating a rental property, because he's evaluating for the end buyer, the landlord that's ultimately going to repair and rent the property out. Here's the way I do it. To me, everything starts with building out what I call the buy box. And this is how you get really clear on what your goals and objectives are. So build out your buy box. And what that means to me is, my buy box in residential real estate is I want to buy 3-bedroom, 1-bath, 900 to 1,200 square feet, brick ranch houses in C neighborhoods that need less than $20,000 in repairs.
That's generally my buy box. Now, then I ask the second question once I've defined the buy box. And why does that look like my buy box, and how much deviation do I go on either side? Hey, if 3-bedroom, 1-bath is your target, do you buy 2 bedrooms? Yes, I do. If 3-bedroom, 1-bath is your target, do you buy 3-bedroom, 2 baths? Yes, I do. It all adjusts my price, because price cures everything, right? And so once you define your buy box and the type of asset that is going to help you get to your freedom number, then you start to look at it and you say, okay, well, how am I going to get there? What do I have to do? Where does that type of inventory exist? So the second thing is you pick your location, your geography. And, many people do it in their own backyard. If I was an investor in Denver today, trying to build my freedom number off of rentals in Denver, I would be very disappointed. I would be frustrated, and I would think, oh, this doesn't work. Contrast that with building in the Rust Belt, the Bible Belt, the middle of the United States, east of the Mississippi, west of the Appalachian Mountains. And there's opportunity to build passive cash flow portfolios big time. So number 2, pick your geography. Number 3, ask this one question. How do you want your money to perform? Okay. And the reason I say ask that question is because most people start and come from the lens of the 401k investment world, right? And, mom and dad said, get a good job, Johnny, find a company that'll match your 401k, max it out. And in 40 years, if you haven't died by then, you'll be rich, right? I think that's a terrible decision, but it's a framework that most people have to say, what is an expected return that is reasonable? And so I start to think then, okay, well, it depends on the neighborhood you're in. So if you say, I want to make 10% on my money, okay, I'm comfortable with 10% on my money, or 8% on my money, or I want 12% on my money. And look, there are strategies that, Mike, you and I could both show people how you can consistently get over 20% on their money, 30%, 50% on your money. The question is, what's the strategy? How much capital can you do that with? Right? It's easy to get 50% if you're investing $8,000.
Right.
That's not very hard.
It's harder to scale.
It's harder to scale. It's harder to get 50% if you're investing $2.5 million, right? Or $10 million or $2.5 billion, right? And so you start to ask, how do you want your money to perform? And what that equates to is what I think about as risk. So then I look at the geographies inside of the geography, the neighborhoods. Where would I want to buy that 3-bedroom, 1-bath house? And, I break neighborhoods down from A neighborhoods to war zones, A's, B's, C's, and D's, A's, B's, C's, and F's, or D's and F's, right? And F is your war zone. And so your A neighborhood is your retail neighborhood, right? If you've got millions of dollars in capital to deploy, and most value investors like us are probably going to end up buying, if we bought cash flow in those neighborhoods, in a 6 to 8% cash flow range, right? Our money is going to perform at 6 to 8% if we paid cash in those neighborhoods. If I get into a B neighborhood, it's probably in the 8 to 10% range. If I get into a C neighborhood, it's 10 to 12%. If I get into a D neighborhood, it's 12 plus. And I'd usually probably say 14 to 15 plus. And then if I get into a war zone, I usually don't want to be there, right? And so I start to think about, how do I want my money to perform? Because that helps me pick the type of neighborhood that I want to invest in. And what I've told people for years is Microsoft Excel is the biggest liar in the world, right? And that is because everybody puts idealistic numbers in, and they don't necessarily put accurate numbers in, right? And
the assumptions are 5% maintenance cost, 10% vacancy, right?
Exactly. And so once you get to a point of picking the neighborhoods, that question of how do you want your money to perform is a question of performance and risk adjustment. So if I've got millions of dollars that I want to put in and I just want to generate cash flow and I want to do it in low risk, man, I'm going to go buy in an A- to B+ neighborhood, 6 to 8% cash flow, and 6 to 8% cash flow on millions of dollars is meaningful, right? It does something for someone's life. If I'm willing to take a little bit more risk, a little bit more effort, a little bit more oversight and management, tenant risk oftentimes, I'll go into that, B- C neighborhood. And then I'm going to say, okay, I want my money to perform at least 10%, maybe 10 to 12%, because now that starts to be meaningful to adjust against the tenant turn and the various things that happen in that type of a neighborhood.
Right.
If I go into lower neighborhoods, I better be an active landlord. I have to not outsource my management. I've got to be an active neighborhood, an active landlord if I'm going to get into a C- D and lower type neighborhoods. And so that's how I think about like picking your geography, or your buy box first, your geography second. Answering that question of how do I want my money to perform, then picking the specific neighborhoods where you can get that performance. And then I just start to run the math. And the math is pretty simple, Mike. And I'll just walk somebody through it real quick. And it all starts with the rents. And here, the way I do it, I can do it on an iPhone calculator really, really fast. And if I just say that I'm in an area, I'm going to call it a C+ to B- neighborhood that rents at $900 a month. And I'm going to take $900 a month and I'm going to multiply that by 0.7 or 70%. What that's doing is that's just taking 30% operating costs off the top, right? That just takes it off the top. It's TIM V, taxes, insurance, maintenance, management, vacancy. Takes 30% off the top. So I've got net cash flow of $630 a month before debt service. All right.
Okay.
Now I'm going to take that 630 times 12 months. So that means if I have no debt, this house is going to put $7,560 into Rob's hip pocket National Bank every single year.
Yep.
Okay. Now, if I'm in a C neighborhood and I want my money to perform at, say, 12%, I'm going to divide that by 0.12. So $63,000. So I can be all in on this house, purchase price, closing costs, holding costs, and repair costs. I can be all in at $63,000. So in my buy box, let's say that I maxed out my repair estimate, repair costs on this house. I want to be less than 20 grand. So let's say that I found a house, meets my buy box, meets my geographies in that C neighborhood, which means I want to make 12% on my money, and it rents for $900 a month, and it needs $20,000 in repairs. I'm going to subtract $20,000 from this, and I won't pay more than $43,000 for that house, because 43 plus 20 gets me all in at $63,000. That's how I analyze every real estate deal. So I always start with, Mike, what are the rents? What is the neighborhood grade? That tells me how I'm going to want my money to perform. And number 3, what are the repair costs? If I know those 3 things, I can evaluate any cash flow real estate deal in existence. Really simple.
And that's as a cash buy. So we'll skip over the financing part and talk about you. I mean, do you use a lot of creative finance, a lot of creative deal structuring stuff? You do sub-2s and things like that, or?
I don't do a lot of sub-2, but I've done a lot of them in the past. I'm not doing them actively today. So this is a cash transaction that got us down to, remember, net $630 a month.
Right.
So out of that net $630 a month, here's the question that you then ask yourself. You now know how much you can pay. You now know what you're going to repair it for. The question is, out of this $630 a month, how much do you want to put in your pocket? Because these are net numbers, right? Tim V's already gone. And that 30% is just an estimate.
Sure.
In some cities, it's higher. Some cities, it's lower. Some real estate investors operate better than others. So it's an estimate. But let's say you want to put no less than $250 a month cash flow in your pocket, $250. So you take $630 minus $250, that leaves you with $380 to service debt. So if you're taking over a sub-2 payment, if you're creating owner financing, if you're borrowing private lender funds to do this deal, however you're getting the money, you can pay that money $380 a month and pocket $250 for yourself.
Yeah, gotcha.
So that's how I look at it. And if you follow that process, figuring out how much can I borrow and how much can I pay becomes really easy. Let's say Rob is going to fund you on this deal. Okay? And you come to me and you say, "Hey, I'd like to borrow my purchase price plus my repairs." Okay? Because the after repaired value, which we didn't talk about, of this house, once it's fixed up, is $90,000. So, Rob, would you lend me $63,000 to do this deal? Well, how am I going to figure that out? I'm going to take the $380 that you can pay me every month, and I'm going to multiply it by 12. So you're going to pay me $4,560 a year. And if I lent you $63,000, that would be a 7.2% return on my money.
Right.
That doesn't get me too excited.
Right.
Right. So you've got to look at it from that perspective and say, well, what would get you excited, Rob? Well, maybe if I was making 9% on this deal with you doing all the work. And so you can run your math back and say, well, if I give him 9%, I'm only going to make $208 a month cash flow. Am I willing to do that? That's how
everybody individually has to make those decisions, right? Whoever you're working
with.
Just like if you're going to wholesale it, somebody needs to decide whether they want to pay your price. If you're a lender, am I willing to lend at this rate, right? So everybody's different, but you're not far off from what reasonable expectations of a reasonable person are, right?
Yeah, and the reality is, I just said, that doesn't get Rob excited. Well, right. Rob is an anomaly. Rob knows how to go get 12, 15, 18, 20% on his money. And so I can tell you, I've got a significant portfolio that's built with private money that the most I pay is 7%. Like the most I pay. So the ceiling. Now, Rob said 7.5% doesn't get him too excited. And yet I talk to countless people out there who are ecstatic by 7% for a couple reasons. Number one, they believe in real estate. Their money's secured by real estate, and their money is covered by an insurance policy.
Right.
Like those things right there take somebody out of the stock market and put them into real estate at 6.5%, 7% all day long.
Yeah. Well, and plus it depends on what's going on in the stock market too, right? It hasn't been doing so well lately. So people are looking for other places to put their money that seems a little bit safer, or at least it's backed by a physical asset, right?
That's right. Yeah. Exactly. Yeah. Exactly. And even when the stock market is quote unquote doing well, it's paper money, right? You get your statement and it says, oh, you're doing an annual return right now of 9.7%. Okay. Well, can you spend that? No, it's on a sheet of paper, right? You can't spend it. And the next statement, it disappears and then it comes back, right?
Yep. Yep.
Real estate is money that shows up in your pocket in Hip Pocket National Bank, and you can spend it.
Yep. Yep. So Rob, with where we're going in the marketplace right now, you're still you're pretty bullish on assets as we talked about, right? And I think because they basically are going to float. I mean, it's, we won't get into the whole currency thing. I know you've got a lot of beliefs and wisdom there, right? Of if the dollar were to collapse and go away, but at the end of the day, well, maybe I don't know. Maybe we should go there. I don't know. We probably don't have enough time to go there. But at the end of the day, like guys like you and me believe that the price of properties, rents, and things are going to at least float with inflation, even if the dollar went away and got totally reset. Now we're trading those houses in some other currency, right? Like that,
Yep.
those assets are going to just, maybe it's chicken eggs at the end of the day. And we're just
Right.
going to be really good at selling chicken eggs because we've got a lot of them, right?
Yep. Well, and that's the thing, right? So it's not as hard as people make it out to be, right? If I own an asset and the crash or the shift, because look, there's only two ways historically that people get through these currency deleveragings, right? And I think Ray Dalio talked about this on one of his really popular videos, and he said there's two ways that people transition, or societies, civilizations transfer through this currency deleveraging. And one is the politicians step up, they do the right things, they put good economic and financial policy in place, and they navigate it through. Doesn't mean that it's not painful, doesn't mean that some people don't suffer, but it means that the politicians step up with character, and they do the tough things to get the economy and the society of people through. I have zero faith.
Yeah, that seems unlikely.
in their ability to do
tell
that.
us about number two, because number one ain't happening.
Yeah. So number two, unfortunately, is war. And these are historical facts. And so number two is war, because you need the spending and the debt and the destruction of war to offset the deleveraging. So where do we sit today? I believe that if the currency continued to devalue, and if we saw it devalue in a significant way where hyperinflation triggered, like what we see in like what we saw in Argentina in the 90s, right? 5,000% inflation. Literally, the grocery stores in Argentina were not printing the price on goods. They were making verbal announcements because prices of commodities and things were going up so fast. And if you own assets and that currency devalues, and the asset that you owned because currency is just a measure of value, right?
Sure.
And so if you own a house that's worth $100,000 today, and that dollar is not worth much tomorrow, then measuring that $100,000 house against that currency, it might look like the house is only worth $5,000. But there is going to be a new currency on the other side of that deleveraging that the society of people begin to trade in. And you can then say, well, give me US dollar 2.0, pay me rent in 2.0. And so when you own assets, you get to just arbitrarily say, well, today I'm going to value my asset with what everybody is valuing their assets, the US dollar. Tomorrow, you get to value the assets in whatever tomorrow's currency is, and you get to collect income in whatever tomorrow's currency is. Right. If you don't own the asset to bridge you through that transition, you're stuck with whatever cash you're holding is now worth not nearly what you thought it was, and you have to go out and actively earn income in the new economy. So bringing this full circle, Mike, for where we started, active income to passive income to owning assets to where we are in the economic cycle, people need to figure out, the small segment of people that are going to listen to this conversation and listen to what we keep telling people, is figure out how to own assets.
Yeah.
Because it will save your family.
Yeah, absolutely. Absolutely. Well, Rob, good stuff today, my friend. So, would you mind sharing with people? Obviously, you run FreedomSoft. It's one of the top CRMs for real estate investors. Really powerful tool. I know you've made massive improvements there over the years as well. Maybe just talk about how folks can learn more about the things you work on or how to connect with you.
Yeah, happy to. They can go to real estate or go to freedomsoft.com and just check out our software. Our software is a lead generation, sales, and marketing CRM for real estate investors. And we've got a lot of great training and a lot of good stuff there for people that want to dive in on that. And they can go to freedomsoft.com/podcast. And I run the Real Estate Mogul podcast. And if you want to go listen to more ramblings like what we just talked about, Mike, with me, you can do that. freedomsoft.com/podcast. And as long as my voice doesn't annoy you, you might enjoy a show or two.
I love your voice, Rob. You got a beautiful voice.
Thank you, Mike.
Awesome, man. Hey, thanks for spending some time with us today.
Appreciate it.
Awesome. And everybody, if you're joining us live, thanks so much. If you did not join us live and you want to make sure that you don't miss another live episode where you get the opportunity to ask questions and we can banter, please go to flipnerd.com/live and you can register there, and we'll make sure that we notify you of all the streams. So you can also go to flipnerd.com/live and see our next several shows. I believe our next show is actually with Trevor Mock, a good friend of both Rob and I. And we have lots of other amazing people. We've actually had some amazing guests on this show as well. So appreciate you a bunch. We'll see you on the next show. Thanks for joining me on today's Flip Nerd Live. To get access to our upcoming interviews with experts and get your questions answered and join our free online community, please visit flipnerd.com/live. Thanks again to our sponsors. Investor Fuel is America's #1 mastermind community for professional real estate investors, where hundreds of the top investors from across the country come together to build stronger businesses and stronger lives. Our community is about giving and transformation. If you're ready to take your business to a whole new level, please learn more and schedule a call with us today at investorfuel.com. Investor Machine is the nation's #1 done-for-you lead source for professional real estate investors, serving many of the highest performing and most respected real estate investors in America. We use a unique approach to data that is truly unlike anything else on the market, then execute your direct mail and skip tracing campaigns for you. Markets are filling up quickly. If you'd like to learn more about our world-class service, please visit investormachine.com. Find out why over 7,000 real estate investors and agents have chosen Carrot to build their website to attract and convert more online motivated seller leads. Visit flipnerd.com/carrot to learn more about how Carrot can help you. We look forward to seeing you on the next Flip Nerd Live Real Estate Investor Training. Please make sure to join our free community so you can join us live at flipnerd.com/live.